This is breaking news.
Welcome back to Trading Day. We, of course, have breaking news for you in just under 30 seconds' time. Carson, the jobs number expected to remain unchanged, 6.2% unemployment, with expected 9.6 thousand jobs added.
That's right. That's on a participation rate that should have held steady at 65% alongside. The Australian dollar fetching around 73.3.
Been rising a little into this read, actually, 73.4 US cents now.
Here we have it, just set to drop any second now on the release. Where is the number? Maybe we just
there it is. 5.1 thousand jobs lost in September. The unemployment rate remaining at 6.2%. So remaining at 6.2%, but the jobs lost in September employment down 5.1 thousand. So 5.1 thousand jobs lost. Full-time employment losing 13.9 thousand jobs. The participation rate actually dipping down slightly to 64.9%. That was versus consensus and last month's read of 65%. So a slight drop in the participation rate. That probably making up for the fact that the unemployment rate remained steady despite a loss of 5.1 thousand jobs. Aussie dollar falling 73.15 US cents. It was at 73.4 US cents just immediately before that read. So quite a sharp fall in the Aussie there, 73.17 US cents right now.
Okay, let's bring in our guests to react to this. Simon Boulton from Aequalis is with us in studio. Simon, your reaction to it, I mean, in terms of a headline level, the unemployment rate holding at 6.2%, that's got to be welcomed.
It is welcome. I think that loss of jobs, permanent jobs this month, comes as a bit of a shock. It's a while since we've had a reduction in the permanent jobs creation through the course of a month. So disappointing. I think the rate staying at 6.2%, as you said, Ingrid, more to do with participation rate than obviously job creation. What
about full-time employment? Because that fell about 14,000. Of course, last month we saw 11,500 jobs added in full-time, so that's sort of reversing and some.
Yeah, I think that we've seen a trend that's been very positive for the last 3 or 4 months. Perhaps this is a readjustment to the response to better figures over the last 3 months. The other indicators are still very positive. Job advertisements are up. Certainly hiring intentions from clients at Aequalis has been quite positive. So again, I think there's that mixed read on these numbers. And I understand as well that the ABS have changed some of the figures again that they're using for the unemployment figures. So I'm not sure if that's maybe had an impact as well.
There was a mea culpa from inside, the former head of the Bureau, just basically saying don't believe a word of any of these numbers. You can't trust them. You might as well eat the paper. Let alone read it, which was damning. But just in terms of that, you know, that belief in these are quality jobs versus kind of just filler positions. Are you saying from what you see at the coalface, there is an overweight full-time component to the inquiries, to the advertisements, or what?
I think most inquiries are for those permanent roles. I think that would be very much where the bulk of people applying to jobs are. I think that, you know, the job market is still quite tight. I heard earlier the guy from SEEK saying that in certain specialist areas, you know, the skills are already becoming short. And we're seeing that rebalancing, remember, to the service sectors from the other mining and engineering sectors that we had seen so strong in WA and Queensland. So there is some rebalancing here that I think is still being demonstrated, which is good news.
We've had developments of the banking space in the last few days, not to mention the Westpac cap raising. The suggestion is that there's going to be more cost out still for that sector. Are you seeing a pullback in positions in finance as a kind of a lead indicator on that?
No, I don't think we are, Carsten, to be honest. I think there's still fairly healthy job numbers holding there. You know, the service sectors do include financial services. So that is an area I think that at the moment is fairly protected from these large falls in other sectors. And earlier as well, I heard somebody talking about government jobs, because that's another place that we are seeing significant growth.
Right.
How do you read into the participation rate falling? I know it's a very small fall, just a point, you know, from 65% to 64.9%, but we do know that the unemployment rate is quite sensitive to those moves in the participation rate. So what do you make of that fall?
I don't know if that might be coming into the end of the year, people's job search sort of going on hold. We're certainly not seeing a downturn in people applying to jobs. And if anything, I think it's probably creeping up. So that participation rate, like you say, Ingrid, it only moves by a very small percentage, but it does have a significant impact on the headline number.
So as you say, there are a lot of the indicators we've been seeing, job ads, job vacancies, have been quite positive, signalling hiring intentions, signalling, you know, jobs going up. So in terms of what we're seeing today with those 5.1 thousand jobs lost, how do you read that in comparison to all the rest of the surveys we've been seeing?
It's very difficult because the other indicators are that things are positive. And as I said, the first decrease in permanent jobs that we've seen for some time. So disappointing, a little bit surprising, but not the first time we've used those two adjectives with the employment numbers.
Okay, your thoughts into end of year now. When do we go into that kind of becalmed positioning? How much longer realistically do job applicants have to get in on the action, or is it more a case of employers actually starting to just scale back until the new year, say realistically February? When's that dead zone?
I think people tend to see it as Melbourne Cup to Australia Day. I still think that's not really a true reflection on business activity. You know, on some occasions we see a lot of activity in December. So I would expect it. There is this sort of caution and there is this hesitancy in what people are doing hiring-wise at the moment. So this would just be another reason to not do very much.
And are you buying the Turnbull bounce?
Yes.
You are buying it. All right.
All right.
Giving him, what, a few days, a few weeks.
All right, Simon Boulton, thank you very much for joining us on the show today.